In recent financial news, Bitcoin, the largest cryptocurrency by market cap, has experienced a significant drop in its price. This unexpected plunge came just 5 days after the Securities and Exchange Commission approved the first 11 Bitcoin exchange-traded funds, or ETFs. These ETFs, which directly hold Bitcoin, represented a new way to invest in the cryptocurrency and were expected to push Bitcoin's price to new heights. However, the opposite happened. Bitcoin's price declined by nearly 10%, erasing all of its gains since the start of the year 2024. This sharp downturn suggests that short-term traders might have bid up the price in anticipation of the ETF approvals, and then swiftly cashed in their profits, causing the price to tumble. This dramatic price drop has left many investors and cryptocurrency enthusiasts wondering about the future of Bitcoin. Despite the recent plunge, Bitcoin has reached a milestone in its journey towards mainstream acceptance. This milestone came in the form of the approval of the first 11 Bitcoin ETFs by the Securities and Exchange Commission, also known as the SEC. This approval signifies a new era in cryptocurrency investment, offering a novel way for investors to dive into the world of Bitcoin without having to directly possess the digital asset. But what does this mean for institutional investors? Well, it's a game changer. Prior to this, the process of accumulating Bitcoin was somewhat complex, requiring knowledge of digital wallets, private keys, and blockchain technology. With the introduction of Bitcoin ETFs, this process is significantly simplified. Institutional investors can now add Bitcoin to their portfolios just as they would any other ETF, providing a straightforward way to gain exposure to this digital asset. The introduction of these ETFs is not just a milestone, it's a launchpad. It's a stepping stone that paves the way for Bitcoin, and by extension other cryptocurrencies, to further integrate themselves into the traditional financial landscape. With these ETFs now on the market, Bitcoin's reach has extended further into traditional investment spaces. Despite the recent downturn, there are several factors that could potentially drive Bitcoin's price higher in the future. Let's delve into 3 major catalysts that could influence the trajectory of Bitcoin's value. First up, the recent approval of Bitcoin ETFs. This development has paved the way for institutional investors to accumulate Bitcoin more easily. With the ability to gain exposure to Bitcoin without the need for direct ownership, these ETFs could potentially attract more institutional money, bolstering the demand and price of Bitcoin. Next, we have the upcoming Bitcoin halving event slated for the first half of 2024. Historically, these events, which effectively halve the reward for mining new blocks, have preceded considerable price rallies. This halving can potentially create a supply shock, making Bitcoin more scarce, and if demand continues to rise, the price could follow. Finally, we have the persistent inflation scenario. As inflation erodes the purchasing power of traditional currencies, more and more investors are seeking hedges like Bitcoin. As a decentralized, finite resource, Bitcoin is increasingly being viewed as digital gold and a potential store of value in inflationary times. While Bitcoin may experience volatility in the short term, these factors could potentially generate triple-digit gains over the next decade. To recap today's developments in the Bitcoin market, we've gone through a roller coaster of events. We've seen Bitcoin's price take a near 10% dip in just 5 days following the SEC's approval of the first 11 Bitcoin ETFs. This plunge wiped out all the gains Bitcoin had made since the dawn of 2024, suggesting that short-term traders might have inflated the price in anticipation of the ETF approvals before swiftly cashing in on their profits. Despite this recent downturn, there are still 3 major catalysts that could potentially drive Bitcoin's price upwards. First, the ETF approvals have made it easier for institutional investors to accumulate Bitcoin, which could drive demand. Second, the upcoming halving in the first half of this year is an event that historically has had a positive impact on Bitcoin's price. And third, the persistent inflationary pressures we're seeing globally are driving investors to seek hedges like Bitcoin. While Bitcoin's journey is marked by volatility, its potential for growth remains, making it a fascinating area of the financial world to watch.